What is an ETF? An ETF, exchange-traded fund, is a type of investment fund you can buy and sell on a stock exchange, kind of like a stock. But instead of owning just one company, an ETF owns a basket of assets like stocks, bonds, or commodities, so you get built-in diversification. Pushpin. Who is SSGA? SSGA stands for State Street Global Advisors, which is one of the world's largest asset managers. They create and manage investment products, including ETFs. A famous SSJ ETF family is the SPDR ETFs, pronounced SPDR. For example, a SPDR S&P 500 ETF Trust, SPY, one of the most widely traded ETFs in the world, tracking the S&P 500 index. Pushpin. How SSJ ETFs work. Tracks an index. Most SSJ ETFs follow an index, like the S&P 500 or another benchmark. A diversification. When you buy a share of the ETF, you're effectively investing in all of the underlying assets the ETF holds. Traded like a stock, you can buy/sell throughout the trading day. Lower fees. ETFs typically have lower fees than actively managed mutual funds. Pushpin. Why people invest in SSGA ETFs. Investors often choose SSGA ETFs because, white heavy checkmark, they offer broad market exposure, like US large-cap stocks. White heavy checkmark, they're liquid, easy to trade. White heavy checkmark, they tend to have low management costs. White heavy checkmark, they fit well in long-term portfolios. Here are the main advantages in simple terms. 1. Diversification. When you buy one SSGA ETF, you usually get many companies in one purchase instead of just one stock. This helps reduce risk because your money isn't tied to a single company. 2. Low fees. SSGA ETFs are known for low management costs compared to mutual funds. Lower fees equals more of your money stays invested over time. 3. Easy to buy and sell. They trade on the stock market like normal stocks. You can buy or sell anytime during market hours, not just at the end of the day. 4. Trusted company. State Street Global Advisors is one of the largest and oldest investment managers in the world. Many investors feel more comfortable using a well-known provider. 5. Broad market exposure. You can invest in entire U.S. market, international markets, bonds, specific sectors, tech, energy, etc., all through different SSJ ETFs. 6. Good for long-term investing. Because of diversification and low fees, they are often used for retirement accounts, long-term wealth building, passive investing strategies. In short, SSGA ETFs are popular because they are simple, low-cost, diversified, and backed by a large trusted company. They make investing in many companies at once easier for beginners and experienced investors alike.